Welcome back to Peppo Coin Channel, everyone. It's wonderful to see you again. And wherever you are in this wonderful world of ours, I hope you're having an incredible day. We're delving further into XRP today, and I have some fascinating things to tell you. Let's get started. I want to start by talking about something that keeps coming up, the whole notion of possible XRP forks and the Ripple CTO. I assume you are aware of how it works. Every time the topic of XRP scarcity comes up, someone says, oh, they'll just fork it and create more XRP. Well, David Schwartz did a fantastic job of putting this to rest. He stated, and I'm quoting here, that XRP has strong safeguards in place, even though forks eventually control all public layer 1 blockchains. The ledger is extremely safe because of features like validator voting for revisions and the public UNL. Here, David is essentially telling us something straightforward. No XRP fork is ever going to happen. And to be completely honest, this makes me nuts. What happens each time we receive encouraging news regarding the adoption or scarcity of XRP? The FUD machine comes to life. Our XRP will be confiscated by the government, or it will be forked by Ripple. Hear me out. The total number of XRP tokens will never exceed 100 billion, that's all. The hard cap is that, and it will remain that way. Now, this is something that truly caught my eye. The concept of native XRP staking on the XRP ledger has been investigated by David Schwartz. And guys, this has the potential to be huge. Consider it. In 2012, the XRP ledger was established. Since then, the world of blockchain has seen a radical change. David's personal views on consensus and governance have also changed. He has been examining the usage of XRP in DeFi, both natively on-chain through smart contract projects and organically through platforms such as Flare, More Markets, Axelar, and Doppler. And you know what? Native staking, in my opinion, would be fantastic for lowering risk. This is what truly thrills me about it. The day when we won't need to sell our cryptocurrency is drawing nearer and nearer. We'll be able to borrow against it instead. Is it possible? Since 2022 was the worst year for cryptocurrency, I sincerely wish we had these possibilities. This is a little-known development that has the potential to be quite significant. In the first half of 2026, HSBC will begin offering tokenized deposits to corporate clients in the US and the UAE. As banks adopt tokenization over stablecoins, they are providing instant transactions 24 hours a day, 7 days a week. This is intriguing since tokenization restores the bank's authority. Take a look at the difference. Authorized organizations issue stablecoins, but tokenized deposits? The commercial banks are the source of them. Commercial banks in other nations are advocating for central bank digital currencies for just this reason. They wish to stay in charge. And to be honest, I understand their point of view. I must admit that I'm not a big fan of CBDCs. Instead of the Fed managing our money, I would prefer to see a private company like Ripple handle this. That's my opinion. Here's the worst part, though. Do you recall Chris Larson serving on the board of HSBC? Additionally, there can be links to custodial services via Mataco. HSBC and Ripple have a long history together. Thus, the ecology may benefit even more from this. They may even use Ripple's rails in the end. The Senate has set a date for America's first complete crypto rulebook, which is breaking news. Early in 2026, a bill to regulate the cryptocurrency market will be introduced. We had hoped that issue would be resolved before the end of this year, but this is what we now know based on the most recent report from Eleanor Tourette and Crypto America. A true timetable was finally made public by the U.S. Senate. Early in 2026, a floor vote is scheduled. Both committees intend to vote on the bill in December and bring it to the Senate floor immediately following the new year, according to Senate Banking Chair Tim Scott. His objective was to establish America as the global center for cryptocurrency. Although it goes well beyond that, this bill will determine who controls XRP. It will distinguish between utility and speculation, as well as between speculation and actual worth. And that's quite important. Consider it from the standpoint of an institutional investor. If you're new to cryptocurrency, wouldn't it be fascinating to understand what is speculative and what is valuable? People will have a far better idea of which cryptocurrencies can truly transform the world as a result. Finally, Christopher Perkins offers some insightful analysis regarding the Basel Committee's recognition that the regulations governing cryptocurrency capital need to be revised. Now, if you are a bank, Basel regulations are quite important. They have a direct effect on share prices and drive return on equity. They actually decide which companies are profitable and which are not. The BIS capital rule suggestions for cryptocurrency aren't all that horrible just now. In essence, they are a shadow ban. When dealing with a counterparty risk weighting of 1,250%, it is almost impossible to make the numbers work. However, this is what drew my interest. Not only do these plans harm crypto-native assets, but they also deter banks from utilizing public blockchains such as Avalanche, Solana, Ethereum, Sui Network, and yes, Ripple. Now, given that the BIS has previously named both Ripple and Stellar numerous times, I believe he specifically mentioned Ripple. XRP and RippleNet have been mentioned in a lot of their white papers. Therefore, it is unclear whether he is advocating for or opposing the inclusion of these blockchains in the BIS. Since we know that Ripple and XRP may genuinely assist banks in meeting Basel III liquidity criteria, my gut tells me that he intentionally included Ripple. And there are numerous recorded instances of this. The fact is that we already know that XRP provides on-demand liquidity. The Basel III issue that banks would encounter in early 2026 is literally resolved by it. Guys, Basel III is more than simply a legal obstacle. In fact, it might cause bank failures. As I already stated, I continue to believe that he intentionally brought up Ripple. Perhaps he supports Ethereum. Perhaps he is supporting Solana. Who can tell? As XRP holders, however, we are aware that XRP can address these Basel III issues. At this point, it's not even a question. This is what everyone was talking about. Ripple has initiated a significant token transfer, transferring 200 million XRP, or roughly $450 million, to an unidentified location. The speculating engine immediately sprang into overdrive. Some claim that banks will soon be able to hold cryptocurrency. Others believe that in order to avoid scarcity problems with future ETF inflows, it is going to over-the-counter exchanges. But to be honest, no one is certain. But here's something we must remember. Additionally, Ripple has more acquisitions planned for this year. Perhaps that's precisely the reason this XRP is being moved. Strategic positioning. This is an intriguing development. The rise of dollar stablecoins is causing ECB policymakers to get uneasy, which could erode euro policy. European issuers, meanwhile, contend that a digital euro alone is not the solution. They desire a robust ecosystem for the euro stablecoin. I've been telling you this all along, though. The dollar will continue to rise. Why? As they are now using stablecoins. Additionally, those stablecoins can now reach regions of the world that were previously inaccessible to traditional dollars. In fact, this is greatly bolstering the US dollar. You are aware of what this does? It utterly destroys the Bitcoin story. Keep in mind that the entire argument for Bitcoin is that it will devalue the US dollar. Guess what, though? The US dollar is here to stay. In actuality, stablecoins are making it stronger. Bitcoin is becoming less significant as stablecoins gain popularity. Furthermore, this trend will only pick up speed in the future. Speaking of astute decisions, Eric Trump just commented on Dave Portnoy's video, claiming to have purchased $1 million worth of XRP. I genuinely don't know what will tell you where this is going if that doesn't. XRP is waking up the globe. And I mentioned this in the video from yesterday. Do what Dave did on bad days. He made the perfect decision when he purchased XRP on a red day. Red days provide you two options: take no action or purchase the dip. On a red day, however, you never ever sell. This cannot be emphasized enough. You will just wind up buying back in at higher prices when the market goes green if you sell at a loss on a red day. Over the years, I've seen a lot of folks experience this. On a red day, they panic sell, only to return to the market when prices are rising even more. Losing occurs both on the way out and the way back in. I constantly advise folks to remain dispassionate when the market turns red because of this. Avoid becoming overwhelmed by the troughs. Please share your opinions in the comments section below. And if you think this was helpful, don't forget to subscribe. I'll see you at the next one.